The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 77, Nasdaq up 14, S&P's up 9, gold contract down $9.30 at $12.70 an ounce. You get silver down 16 cents, $17.24 an ounce. Platinum is up $2.50 at $9.40 an ounce. You get the copper market up 3 pennies, $2.63 a pound. Light sweet crude up 18 cents, $45.82 a barrel. Notes and bonds. Notes down 8 ticks, 126.14. 30-year bond off 18 ticks at 155 even. And King Dollar up 452 ticks, 97.350. If you haven't test drove the Nadex platform yet, folks, great time to do it. Come over to our website at TFNN.com. You'll see the banner on the top or the side. You hit the banner, bring it up. They'll put $25,000 of paper money into your account. You can walk along with us as we trade these defined option contracts. Darrell Martin, what's going on?
How you doing today, man?
Well, it's the Teflon market. Everything's green, shakes everything off. We're rocking and rolling.
Silver's down, so I've been short on silver.
Yeah.
But, no, it's been going really good, and having some fun out here with the markets, and got a whole new week coming up.
Yeah. So we get the Fed next week.
Exactly. So we've had some nice vol. I mean, for a summertime trading, which can very often be flat, we've had some amazing volatility
Inside the currencies.
Yes.
Right.
And we had a couple of bumps here and there, even on some other things. Oil has had some
the
moves,
commodities too. There's no doubt. The oil market moved around a lot. Gold, of course, gold and silver. Gold went up $20, $25, gave it up in 2 days. $25 down the way down.
Yeah. Yeah. So that's one of the things that I always encourage when I'm working with traders. What do I trade? And I'm like, there is no best instrument. Because everybody wants to find that best instrument to trade. And I'm like, what's best is what's moving.
Yes.
And so you need to learn as a futures trader, and I think futures traders have an advantage personally over any other kind of trader because they learn how to read all the different markets. They're not just looking at stocks, and stocks is fine. It's fine to be a stock trader, obviously. More people are than not. But I think if you learn futures, at least learn to watch them if you're not trading them, because then you're watching, commodities, ags. And you're looking at metals, you're looking at energies, you're looking at indices, you're looking at interest rates, you're seeing everything. You see the whole world.
Yeah, and today's a big one. The WASD report's at 12 o'clock today.
Exactly. And so there's always something, there's something moving. And so if you have up a little bit of everything, find out, you're a couple in each category that you like to watch. Like I'm corn and soybeans, gold and silver. I'll look at usually NASDAQ and Russell are my preferred.
Okay.
I'll have ES up just because obviously it's the big boy.
Yeah, I haven't traded the NASDAQ now in probably a good 3 weeks.
Yeah.
Because you know what, it seems like the NASDAQ right now is really just like it was in '99, and every day this thing wants to go to the freaking moon. So it's like, okay, until it doesn't, it does.
Sure. Yeah, you're like, my bear suit can't come on, so I'm out of here. But yeah.
No, so I went in the S&P.
Yeah.
That's because the difference. Well, and the main reason is that, as I just said, that the Nasdaq, the Nasdaq could go up another 100 points, 200 points in a second. You can see that just from Nvidia. But inside the S&P, like if we go look at Goldman for a second, Goldman is the leader out here. And that's still in an ABC structure down, but it's doing, to me, it's doing a counter trend bounce. It's coming right into this 2 220 area, which, it hasn't been able to hold the, 225 it hasn't been able to hold. So I like the idea that you have the financials that haven't been strong and those oil stocks have got killed, and they haven't been strong, and they still can't hold up. I mean, it's pretty amazing looking at ExxonMobil, $80.
And I mean, you bring up a great point there on, you're saying oil stocks, metal stocks. Like, I think that's if, as a stock trader, you don't have to, I'm not saying you have to watch the futures, but if you can at least, bring in like stocks in those different areas, so that way you are seeing things like metals and, commodities and whatever you do though as a trader, the more you can look at different areas, it'll also help you narrow down instead of like, trying to pick between 23,000 stocks. But you want to be able to see multiple areas so you can find what's moving that day so you can take advantage of it.
Yeah, there's no doubt. The dollar index out here today, folks, is going to be interesting. So dollar finally got a bid yesterday. We went from 96.565 to 97.130. The place to watch out here, it looks to me, is 97.275. If that can't hold that today, then that's saying it's going to go back down. If it holds it, then you can get a counter trend bounce, really almost up to 98.335.
So dollar index brings up another thing on ICE. So we got Russell moving officially over to CME here in about a month. So
to a different exchange, right?
Yeah, to the CME. So that's money saved for those that want to trade Russell, not have to pay another $100 a month or whatever. Yeah.
Sweet. Stay right there, folks. Darrell, Tom, and myself, we're coming right back. Our phone number is 877-927-6648. Dow Industrials right now are up 78. Nasdaq's up 15. S&Ps are up 9.5.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 89, Nasdaq's up 17, S&Ps are up 10.5. We got a Teflon market out here, man.
End the week on a positive note, right? We'll see. Par for the course.
I tell you, it's pretty amazing, man. I mean, it just shakes off everything. You know, whether you get hearings, whether you get the UK.
Surprises everywhere, sure.
That was a boom on the UK, that 200-pip move. I was short, and I was glad I was on Nadex. I mean, you know, I would have been nice to be on Forex as well, but like that move, I mean, like those kind of moves remind me of why, you know, I trade Nadex. I mean, a 200-pip move out of just nowhere, you know, just totally hot.
So let's go over to that. So what Darrell's talking about, folks, this would be the pound, and that is quite a move, man.
Yeah, it was insane. Like, yeah, it's like boom.
So we went from 129.55 to the U.S. dollar to 127.09. Yeah, literally in a heartbeat, huh? At 5 o'clock. That's pretty amazing.
So I was short like several binaries, like 11 o'clock, 7 a.m., all that, and on pound dollar and pound yen, and. You know, I was doing pretty good, about 20 ticks in the money, you know, things in my favor. I'm like, sweet. And then all of a sudden, boom, and I'm like, oh, I'm golden now. You know, so yeah, it was, you know, and I mean, I could have just, the thing I always try to remember, because it's easy to get like real down if you lose as a trader.
Yeah.
Right? And it's easy to get real high if you win, you know, like thinking you're awesome. And one of the things I try to remember is that, you know, I could have just as easily been long when that thing dropped like that. You know, I mean, like my indicators had, you know, green stuff on them or whatever, you know, the way I read the market, I could have been long. And so, one, I get to enjoy the win, but I also get to go, okay, remember, if you would have lost, you would have been okay. You know, whereas if I would have been like, you know, long Forex, long the pound.
Sure.
And the market, you know, no stop would have been hit. I mean, it just would have jumped.
Right.
I mean, people got margin called on that 200-pip drop.
Sure.
Oh, in about a heartbeat, man.
Yeah.
And some people are like, oh, that's a rare event. And it's like, no, that's an event that's happened probably a dozen plus times in the last 12 to 18 months.
It's not a rare event anymore.
Yeah, right.
Right?
Yeah. And I mean, it honestly scares me to trade without at least a hedge on Nadex, which is my favorite strategy, you know, which is going in and hedging off, you know, either a master spread or the Forex or futures if I'm trading them.
And if we go over to the Nadex platform, folks, as Darrell's talking, you're going to see that you have indices, you have Forex, you have commodities. Bottom line is that you would go right into, depending when you want to, meaning the spreads or the binaries. And if we went down, I'm going to go right into the pound US. Just we can talk about from the aspect of whether it's last night or today. You're going to see that there's all these different contracts. And as Darrell was saying, is that you're talking about defined risk. So right now we have the pound trading at 127.3. Let's see, 126. There's one close to the bottom of the box. 127.
That's going to be out of the money slightly, 127.5.
Yeah, so this one's right below the box, right?
It's going to be like in the middle.
Okay, so right now, when you talk about... Yeah, that's right. I see. Right. Yeah. When you talk about defined risk, you know, not that I'm not saying to trade this right now, I'm just going to show you how this works.
Sure.
Bottom line is that, you know, you could be buying the pound for a counter trend bounce, you know, at 127.37, you'd be risking $112, and the top of that box is 128.27, 128.75. Right?
Yes. Yeah.
And you know, these are the things that are really important when you're taking a look at the.
Well, if you're going to trade before an election, especially in Britain, I think we've learned to have defined risk.
Wow. I'll tell you, man. This is par for the course now. The thing that's going to really be wild now, after this has happened so many times, is that every time there's an election now, it's always going to be like, okay, what do the polls say versus what it really is?
Sure.
Right?
And I don't envision anyone calling a snap election with power anytime soon again in Britain.
That's the amazing part, folks, is that she didn't have to call an election.
And she already had a majority. Well, she, the Conservative, the party, had a majority. You know, and they wanted more majority.
Yeah.
Careful. Greed can be quite a factor.
Pretty intense.
Yeah.
Let's go take a look inside the market. Well, you know, the Dow Industrials. So the Dow Industrials right now, they're up $95. You're at 21,000. There she is. She needed to test that high. Okay. So yesterday, folks, I want to show you this because we weren't on the air then, Tommy, but look what happened here. Yesterday, folks, at 12:10, actually, I think it started at 12:10. Yeah, 12:10, we went from 21,201 to 21,265 in
20 minutes.
Yeah, 20 minutes, and then gave it up.
Yeah.
When I looked at that yesterday afternoon, when I was interviewing Basil, I said, "Oh, did that really happen?" And Basil said the same thing, that he had to check it because it gave it up so quick after that. Do you know what I mean?
Like when you're pulling up a whole different platform and different charts, and you're like verifying it. Like,
seriously, because that's how it shook out. So it's going to be intriguing here, you know, to see that. Okay, we get the Friday trade, and it's going to be slow trading. Is it going to be able to hold? You know, and if it holds, guess what? That means it can go a lot higher. Inside the NDX 100, I'll start with NVIDIA because NVIDIA is a confirmed ABC structure up. I believe it's 184, right around there. You know, you hit 168 today. That's like sick. It's given it up a little since then, but of course that powers the NDX in a huge way. Nvidia's up 3%, Dish is up 2.3%. Yahoo's got a big bid. Yahoo, they spun off their internet to Verizon yesterday, and now Yahoo is just a holding company, folks. So where Yahoo goes now, this is pretty cool. I mean, really, what Yahoo has done now, because all that matters is where Alibaba goes. So imagine you have a company, and all the company does now, it holds so many shares, millions of shares of Alibaba. So where Alibaba goes, that's where Yahoo's going, you know, because of that, because of the structure.
Yahoo bought so many shares in Alibaba. Yeah.
What happened is that Alibaba, you know, if Yahoo, man, could have been, well, it still did very well, but at one point, Yahoo owned 25% of Alibaba. They funded them at the beginning, and that's what saved their life. And so then what ended up happening is that I believe they sold half of that about 2 years ago, or maybe 3 years ago when the IPO was coming out. And then when they split off the internet part, meaning that their whole business,
core group, they call it, the core.
Okay, they split that. Then they were just a holding company. That's why the bottom line is that employee-wise, it's going to be like, I don't know how many employees they're going to have. They're not going to have many. They're just holding stock now. They're a holding company, and wherever Alibaba goes, guess what? You know, and the shares of Yahoo, though, at some point, maybe they'll sell them, maybe they won't. You know, but you still have the shares.
Sure.
You stay right there, folks. Darrell, Tommy, myself, we're coming right back. Dow right now is up 96. NASDAQ is up 18. S&Ps are up 11. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Everything's at all-time highs.
Is it? Okay.
Everything. Just in that break, folks, I just had to go through everything, and I'll tell you, this is pretty wild. Okay, so watch. The Russell, I just did it. This is interesting. Actually, it's right underneath it.
Not quite.
No, exactly. The IWM had done it. Maybe this. I don't believe. No, this is not a delayed. Yeah, it would say delayed. So the Russell. 1425.69. We've hit 1423.17. So give it a few more minutes.
Right.
Dow Industrials, they're at 21,293. They've done it. You got the high last week was 21,225. 292. 225. Well, this is way over. Interesting, right? Yeah. So 225. We're at just give it a few more seconds. We're at 21,300.
Yeah.
NDX 100. Okay, so that's still hanging there at we're at 58.95. I see. 58.95.17 was the high from last week. Is the high. 58. Yeah, we've made it. 58.97, right?
Last week. That's daily.
Oh, thank you.
That's yesterday.
Yeah. Okay. So, yeah, we're at high. So 58.97 thus far. Pretty amazing.
Yeah.
No two ways about it. And of course, don't forget, folks. What you do have is that bottom line is that on any of these. If you were a bull out here this morning and you're inside this platform, there's a lot of money to be made out here on the bullish side this morning.
Sure. We're
right?
up like 100 now, right?
Yeah, it's huge. It's absolutely huge.
How about gold? Can we look at gold? Because that's getting hit again this morning a little bit, right? It was 1269 when I pulled it up at about 9 this morning.
So if we pull up the dailies, let's pull. They whacked this thing good.
Yeah.
And I looked at it on the downdraft to buy, but there wasn't a spread that was right next to it. That's what was going on.
Sure, you didn't like the risk reward, maybe.
Yeah. Right. Well, it wasn't bad, but it was it was almost a little over I was risking like 40% to make 60, and I kind of like it more than that.
Sure. Yeah. You want better risk rewards for that. And I'm just looking at, yesterday.
So let's check out what you're looking at now. If you're looking at a trade now on gold, we're down at 1 deviation right now.
Okay.
Literally. So basically the expected move of the day. What are you looking at for, now? I believe we got a few hours left that
yes,
the pit floor is open, and gold is open on Nadex. What are you looking at? You looking to continue down? Do you think it's just going to level off for the rest of the afternoon?
I would have been buying it. I like how, thus far we've done like 100 and. Yeah, just put this over here for a second. We've done 151,000 contracts. You got to 1266.
Yeah.
You're going into last Friday, which had 272,000. And what happened is that you had higher volume yesterday. We had the expansion of volume. And what I like to see is actually, on a pullback, I like to see an expansion of volume before you get to the swing point. So your swing here is 1261. You had that big expansion yesterday, 257,000 contracts. Today, you're at 151. You get a Friday. This will do a couple 100,000, but it's not going to be 257.
Right.
And you're coming into 270. So it's like, okay, had huge energies. You get the sellers. Now there's less sellers. You're coming into strength. I like that deal. And then when we look at it intraday, I like this. I mean, intraday here, I would say that we can close out today. It's not huge. It's like $3.50 higher than we are. It's $12.73.50. And where I'm going with that was the downdraft from yesterday. Well, actually, you can do a little bit higher than that. The first bar right there. Oh, that's interesting because the first bar is 1281. More conservative would be the 1273, but let's go look at that, because you're just looking at that, it's like, okay, that'd still be, you can consider it a counter trend bounce. And if we brought up the platform there, here, let's look at it. So I'd be looking for a spread, Darrell, right?
Right. Okay. So I got my spread scanner up right now.
Okay. So
and I'm looking at the buy side, and we're looking for a low risk, high reward, and not too far away from market, because we got to, if our expectation is 1273 or 1275, then 1273 would take us basically right to 0.7. 1274 would take 1275 basically would take us to back to half a deviation and move up. So very, very realistic. So one of the things that we want to do when we're trading is we want to look at what the offer price is of the spread that we're going to buy.
Right.
Because let's say if it does, if we think it's going to, go up and settle around 1274, 1275, then obviously we want to buy lower than that. We don't want to go in and buy, the 1300 spread.
That's for sure.
That's an offer at 1300.
Right.
So it's any good because we don't even think it's going to go that high. And there's a 1275 spread. Again, won't do us any good. Like, hey, it's only $5 risk or 51. That's it. But again, if it's going where we think it's going to go, at best we break even if it gets up. So. Really what we're looking for is trades that are pretty close to where the market is trading at currently.
Right.
And so let me go over here. I'm going to hit near the market. That's going to bring us right down to these spreads. And if we want to go in today, so to give it time, because it's probably not going to be flying at this point. We got lunchtime coming up, and we're going to the close, and it's Friday.
You'd want 130 for sure, right? Which is end of day for the gold pit. We're going to this gold trading here, right?
And so that brings us to the 1260, 1300 spread, which gives us $100 of risk. If we move 5 points, that's $50 reward. But we have 293. But I can also talk. We may look at how to lower that risk as well. So that's one of the things that we can always check out doing. And let me get rid of the direction. So that would be our spread because it has the lowest risk. Okay, and it's trading near the market.
Yes.
So if it moves up, we're making 3 points a contract, $30, whatever, 5 points a contract. But we also are going to want to go in and see, is there a hedge, a really cheap hedge, that we could use at all, And so I'll have to look at that. And this thing goes down to 1260. That's up at 1275. Let's look at to see what this would look like. Yeah, that's not going to help us out too much. We got that one. By the time it gets there, we're going to be break even. We could get right now we get a 12 o'clock. Here in about 30 minutes, we could get a 1 o'clock, which I think would be a little more ideal. Okay? But if you got like a 12 o'clock contract, we'll talk about when it comes back, but this is how you can hedge off that risk and make it very small.
Stay right there, folks. Tommy, Darrell, myself, we're coming right back. Dow Industrials right now up 99, Nasdaq's up 18, S&Ps are up 12, gold's down 950, you got silver up 16 cents, and good old King Dollar's up 467. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. And folks, if you haven't test drove the Nadex platform, come over to our website. You can hit the banner, bring it up, walk along with us as we trade these defined option contracts. Right now, we're setting up a look at gold is trading at $1269.90. I'm looking that we could close at $1273.30, and we're setting up not only a potential trade, but Darrell's also going to be putting some kind of a hedge on the other side of it. So let's see what we got here.
Okay, so here's what we got going on. We are looking for a trade on the spread with as low of risk as possible, as close to the market as possible.
Yes.
Because the closer it is to the market, the less it has to move for us to be profitable.
Right.
Because I mean, if you buy something 5 points above where the market's trading, obviously it's going to move slower, and that's where people sort of get tripped up on trading Nadex. They forget it's an option. And the way that Nadex prices their options, so for you option traders out there, they price them with the premium, plus the premium plus the intrinsic value, and then they put the actual price on there with the strike. So they just take all the premium, all the intrinsic value, and they add that number to the strike. So instead of this being, let's say it has a premium of currently, let's see, the floor to $12.60. So instead of it being $101 for the contract,
yes.
Okay, which I mean that's the amount of money you're going to have to put up, but it's priced at, basically at 10 points. So it's going to go and put it at 1270. So if the floor is $12.60, instead of just saying, hey, $100 cost for the option, it's going to say $12.70 for the contract. So because option traders are so used to seeing just the intrinsic and extrinsic value, Nadex prices intrinsic, extrinsic value, and that's still the same thing. It's just they're adding on to the strike. So, but the non-option traders are like, what are you talking about? Who cares? So 1270. That's really close to the market. We're sitting right now at 1269-ish, floating up and down within a point of that. And right now it's just like a tick off the market. So you can't get better than that. There's not a lower risk spread that's near the market. There's 3 lower spreads, but they're way above our even target. You have to pay at 1275, 1280, 1300. And so if you're looking at my screen right here, what you'll see is this blue area right here. This is the P&L on the left side, profit and loss.
Yeah.
And this is the price of the market going up and down, okay? And sort of where that profit and loss would be if the market was up here or down here. And this black line is where the market is sitting currently, okay?
Yes. So
our goal now goes, okay, $100 isn't, 100 or 90 bucks, whatever, isn't a bad risk. But the one thing I don't like about it is, I'm only going for, let's say, 5 points.
Right. And earlier today, gold was down, I believe. Let's just see, because let me just get this number. So, because this would be the correlation on the other side, folks, is that, actually, we're only looking for, I'm looking for $3 up, but guess what? It can be $3 down in a heartbeat, too. Sure. 1266.70 was the number, right?
So if I'm looking for $3 up, and this is one thing people got to remember, I got to, that's a $30 profit.
Yeah.
Okay. And so I don't really like taking a $100 risk to make a $30 profit, even though there's $300 of potential profit.
Sure.
Our goal is 30, not 300.
Right.
I mean, we'd love 300.
That's right.
Our view of the market is 30. So what can we do to make this a good risk reward trade? Because and we have to do an end of day, like you said, we need the time. So what we can do is we can actually go in and we can look at first we can look at the dailies, but there's no good daily contracts right now for hedging, okay? And what I'm looking for when I do a hedge trade, and this is, for you stock traders, option traders out there, this is a married put, a married call is what it is. It's where you're buying a put to hedge a long trade, or buying a call to hedge a short trade. We're doing the same thing. So the difference is we have contracts that expire like every hour, and in a day. So there's not really a good end of day option, but there is currently a good intraday option. It'll give me protection for an hour.
Okay.
Okay, an hour and 15 minutes. Now in 14 more minutes, and I'd like to see gold maybe start moving a little bit back in the direction before we even enter the trade.
Yes.
Okay. In 15 more minutes, I'm going to get a 1 o'clock expiration that's going to come up, because every hour a new expiration comes up. But let's say we were hopping in the trade right now just for time's sake, because in 15 minutes the show will be over. So. And I could go in and I look at this trade right here that has a low risk and a pretty close to market trade. It's only 8 ticks off the market, okay? And the risk is only $13. All right, we see that right there?
Yes.
So that's going short. And so you can see this little red triangle saying, hey, this is what it's going to make if the market goes down, right? And this is what it's going to lose if the market goes up. And notice that's very small what it's going to lose. And so to figure out what my true risk on this trade is now, at least until 12 o'clock, okay, because that's when the hedge expires. That's why I like the 1 o'clock, because it gives me more time.
Sure.
But, the 12 o'clock one for the next hour and 15 minutes, gold's actually dropped a couple points, or a point while we've been talking, right? We go in and we look at what is the buy, what's the offer on the one we're buying, 1269.8, and what's the bid on what we're selling? It's 1268 or 1268.6. So now we're at 1268.6 versus 1269.7. That's 1.1 points. That's $11.
Right.
So if I buy this contract and sell this contract, my risk, at least until noon, is $11. So if the market goes up 30 points or 3 points, I make $30. And if it doesn't do anything, then I lose 11. So now I have a good risk-reward ratio with my target, not just with the contract,
right,
but also with my target. And so if I was going to put that trade on, I still want to see a little bit of movement,
for sure, right,
back into the direction. And I don't need much. I mean, we're at the one deviation. I just need it to break, basically 1270, basically 1271 is what I'd be looking for. But anyway, so
and then if you kept that on, you'd be looking for when that next expiration comes in. More than likely, you do that next expiration too, right?
Exactly, and it ought to be actually pretty cheap because we're coming really down to the end of the day. The market's slowing, unless the market makes some big move in the next hour and a half. It actually ought to be a pretty cheap contract. And we only got, like I said, now we have 11 minutes until it pops up. So there'll be another contract, and there'll be another low risk contract, because what they do is they put a low risk high, low risk low, and then they put it's right in the middle. And so I like the low risk for hedging, and then the dailies for trading. And now, if you did put this on right now, we got to be aware of is say you're risking a net $11 or whatever, and that doesn't mean you're going to lose that, by the way, because you could just get in and out of the trade. Because if I got in this trade right now, and let's say it expires, all right, it's going to still have its premium in it. I mean, it's pretty close to the market. I'm still going to have $8 of the 14 that's in there. And so I can go in, or now, actually, I'll have 8 of 14 that's in there. I can now take that money and go in and do another contract. It's not like a total loss, unless the market flies up, which would be a good thing for us. That's our goal anyway. It's not a total loss. I could actually still go in and do another contract. I've only taken a $4 hit. I can do another $10 contract and repeat it in 15 minutes.
Stay right there, folks. Darrell, Tom, and myself, we're coming right back. During the commercial break, you can come over to our website at TFNN, hit that banner. Bottom line is that Sunday night, we'll talk about it when we come back. The currencies are going to open. You can test drive this over the weekend. We're going to be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Darrell Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 99, Nasdaq's up 17, S&Ps are up 11.5. And folks, bottom line, Sunday night, markets are going to close. Well, we'll see whether they close at highs. Sunday night, you can start taking a look at these currencies, and we'll see over the weekend how these currencies are shaking out.
Yep, and then okay, so just to bring that back up,
yes,
again on the hedge here on gold. So anytime I do a trade on Nadex that I'm doing like a long spread trade, stuff like that, and either I'm hedging futures forex or I'm hedging like that daily spread. So it's pretty simple math. It feels real complicated, but just look at what price do you buy the contract that you're going long on.
Sure.
What price do you sell the contract you're going short on? And as long as the profits up here overlap each other or are equal, okay? So see how that profit, like the short keeps getting higher and higher and higher. All right, it goes above the max loss, and this profit gets above the max loss on their contract. As long as your profits will exceed the max loss on the other contract, then your only risk on that trade, at least when doing a spread versus a spread,
yes,
is the difference between where you buy and you sell. Right now, that's 1 point. So it's a $10 risk. And we still have a target of say 1273, 1275. So now we're talking about $10 risk with a $50 to $60 reward. That's a good trade.
No, it's a good trade. But particularly what happens, folks, is that we're talking right now about a small consolidation. You can imagine in a larger consolidation,
sure,
how you can protect yourself. In this particular case, what we're saying is that if I bring this up here for a second and just show you the two different aspects of what we have, is that you have, I'm going to put this intraday. So intraday, what you have, where we were going is I was going for the downdraft of yesterday, the bottom of that downdraft, which is that the most conservative would be 1273.50. You might get the 1280. That's the upside, and then the downside, of course, is the low of today. And we know the gold market on a Friday, and that's why that hedge would be pretty cool. Actually, is that they can take gold south so quick. It's forget
sure,
$10 is nothing.
Especially coming off 12.95, right?
Yeah, right.
Down $25 over the last couple of days.
Down and this, and there's been a consistency here, folks, inside the gold market that we've got these runs and it gives it up again.
Sure.
Do you know what I mean? And now this one here, it had the volume, had everything. I like the setup right now, but that being said, bottom line, there's been a consistency here. It's been having a hard time holding price.
Sure.
And what we have had is that the dollar index is catching a bid, and it should catch a bid. This dollar index, man, that's so that correlation is important to wrap your head around too, because the dollar index has been on a one-way trend for 6 months now, since January 3rd. There it is. January 3rd hit a high, 103.750. Now the cool thing is that today we're right. It's coming into 46,000 contracts. The low of that bar, which is on the 18th, is 97.275. So for you bulls and bears out there inside the metals market, that's what you want to keep your eye on. So we'll see whether that number is going to hold. Because if it holds, that means that this bounce should go higher. If it doesn't hold, and what has happened since January 3rd is that coming into the close, it seems like they keep selling it.
Sure.
That's
it. That's a quick hour.
That is quick, man. You stay right there, folks. Mr. Basil Chapman's coming up next. Swim lessons, Steve Rhodes, Dave White, myself. Thanks, pal.
Thanks, man.
Darrell, thanks so much. Have a great one. Have a safe one.
Great show.
Absolutely. Stay right there, folks. Basil's coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.